Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 7th, 2025, and we're diving into Algonquin Power Utilities' latest earnings report for the fourth quarter and full year of 2024. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Algonquin Power Utilities has been undergoing significant changes, and this report provides a lot of insights into their strategic direction and financial health.
Revenue and profitability overview. Let's start with the revenue and profitability. Algonquin reported fourth quarter net utility sales of $426 million, an 8% increase. However, their adjusted EBITDA for the quarter decreased by 5% to $248.6 million. John, what does this tell us about their performance?
The increase in net utility sales is a positive sign, indicating strong demand and effective rate implementations. However, the decline in adjusted EBITDA suggests rising operational costs, which the company needs to manage better. For the full year, net utility sales grew by 4% to $1,687.9 million, and adjusted EBITDA increased by 3% to $1,039.3 million, showing overall resilience despite quarterly challenges.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 8s for the quarter, but Algonquin reported an adjusted EPS of 6.6, marking a 50% year-over-year decrease. How are analysts reacting to this miss?
This miss on EPS is certainly a disappointment, especially given the 50% decline from the previous year. It highlights the challenges Algonquin faces in managing costs and the impact of their strategic transitions. The market may react negatively to this, as it suggests potential volatility in earnings as the company continues its transformation.
Strategic initiatives and corporate actions. Algonquin has been active in reshaping its business. They sold their stake in Atlantica for $1.1 billion and their renewable energy business for $2.1 billion. How do these moves fit into their strategy?
These sales are pivotal in Algonquin's shift towards becoming a pure-play regulated utility. The proceeds are being used to reduce debt, which strengthens their balance sheet and positions them for future growth. Additionally, the leadership transition with Rod West as the new CEO is expected to drive this strategic focus forward.
Operational efficiencies and future outlook. Looking at their operations, the Regulated Services Group showed growth, but there were significant non-recurring costs. Can you elaborate on this?
Indeed, the Regulated Services Group saw a 2% growth in Q4 and 4% for the full year, driven by new rate implementations. However, non-recurring costs of $3.6 million in Q4 and $18 million for the year impacted their bottom line. On a positive note, they secured $21.2 million in revenue increases from rate cases, and they have more rate cases in the pipeline, which could further bolster their financials.
Key takeaways. In summary, Algonquin Power Utilities is navigating a transformative period with strategic sales and leadership changes. While they missed EPS expectations, their focus on debt reduction and regulated utility operations is promising. Thank you for joining us, John.
Thank you. Algonquin's strategic moves are setting the stage for long-term stability, but investors should watch how they manage operational costs and execute their rate cases.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on Algonquin's performance in the comments below.